Everyone, let's start with a confession. My name is Wayne Nichols, and I have a dividend addiction. It's true. I dream about them. I want them. All I can see myself doing in the future is investing in dividend stocks. Hey guys, thanks for tuning in. In all seriousness, I really am infatuated with dividend stocks. When I realized the power of making money when you sleep, free money, as my friend Chris introduced me to the concept of dividends, it was really something I began to focus on. But the question that I have for you today, and even for me, is it possible to own too many dividend stocks? Well, I'm not even sure of the answer, but I wanted to take you guys inside of my Robinhood to M1 trade. I talked about it in my earlier videos. Last year, my primary brokerage was Robinhood, and I was grabbing every dividend stock you could think of. And it really comes down to, I'm very much in the beginning stages of being knowledgeable regarding doing research and understanding the financials of every stock. So a lot of the picks that I made in 2022 is really based on limited research, maybe information from a friend, maybe going on YouTube, maybe I'm, a fan of the company or I use their product. But that's something that I want to work on in 2023, and that is becoming more knowledgeable with how I research these stocks, how I understand the business, the financial fundamentals. And so you might see some stocks in my portfolio that you say, Wayne, I would never own that stock in a million years. And I wouldn't agree or disagree with you, but I do have a plan. And one of the things that I think I need to do is look at my existing portfolio and see, do I really need this number of holdings? So let's get into it. I'm currently logged on to my M1 portfolio. And from earlier videos, you guys have seen that I have 4 slices allocated in my portfolio. And it breaks down by the target of 80%. I have all of my future money going to long-term hold. 10% going to quarterly dividends that I have in that slice, 5% to my ETFs, and then 5% going into my monthly dividends. I think last time I focused on what was in my long-term hold slice, and as I mentioned, it probably wouldn't look much different than maybe your long-term hold stocks, with maybe a few differences. But now we're going to get into what I transferred over from Robinhood. And guys, I'll warn you, it's a lot. I wasn't kidding when I told you I have a dividend addiction. So let's go ahead and look at the activities. And I'm going to go ahead and narrow this down to position changes only. And all of this transfer information reflects every stock that I transferred over from Robinhood to M1. And I'm not going to go through each and every single one of these. I actually want to focus on what I think is going to get me to that coveted goal of reaching $15K in annual dividend income. That's in my taxable accounts of M1 as well as Robinhood. So we'll scroll through some of these and you guys can see, some of these are very large positions. So 400 shares plus of Stag, 200 shares plus of O Realty. We've got my largest dividend holder, OCSL, 3,000 plus shares. By the way, just this OCLS position gets me about 2,000 in annual dividend income every year. It's one of my big winners in my portfolio. I'm really excited because I'm just now starting to hear other YouTubers and other financial experts really give praise to OCSL. So of course, do your own research, but I'm very, very happy with this position. We've got a couple of, if you will, covered call ETFs. So we've got JEPQ and JEPI. We're going to talk about why I think my monthly paying dividends are really going to help me build that long-term growth slice that you see in M1. We've got 600 shares of Horizon Technology, yet again, another higher yield monthly paying dividend. Let's go ahead and take a look at the next page, guys. Yes, there is a next page. Almost 100,000+ in assets that I transferred over. You can see here as little as 1 share got transferred over, and back to OCSL, I think it was 3,000+ shares. Another monthly payer, Glad Capital, 200 shares. Coca-Cola, which I'm really excited about this holding between Coke and Pepsi. Those are the stocks that I imagine holding on forever. I will never ever part ways with those particular stocks, and then that's kind of why they make it into my long-term hold portfolio versus, let's say, even though technically Coke pays as a quarterly dividend, I would never put it in that folder. To me, the label that I give it is the long-term hold. What else do we have? Some relatively new kids to the block for my holding. MO Altria Group, my sin stock as they call it. I've got 10 shares of that. So just some various stocks. I want to get into the question to you is, if you are just starting out, let's say this is your day one, you've got nothing in your portfolio. Let's say you got $1,000 and you're looking to start up building your dividend portfolio. If you had $1,000, what would you invest in? Would it be one stock? Would it be 5 stocks? Would it be 10 stocks? And this is really the question that I struggled with when I first began investing in dividend stocks, right? Like, do I put everything in one basket, or do I take that money and spread it around? I'm in this position where I have quite a few holdings. And if we go to my holdings here, you can see I currently have 51 positions, 51 funded positions. If we go to my portfolio, you can see here, I've actually added a few positions in my quarterly dividend slice, and 3 of them have not yet been funded because it obviously has a lower allocation percentage. So Tyson Foods, Stanley Black & Decker, and an EPD, which is a dividend sweetheart. I'm hoping to get these funded, but again, 50 plus positions, and I actually have 3 more. I'll be the first one to tell you guys, I think I'm very top heavy with the number of positions that I hold. But here's the follow up, if you will, the banter with myself. Yeah, I've got 51 positions, but the argument could be made, you know what? That's 51 different dividends that I am receiving throughout the year, whether it's every month, every quarter, biannually. That is consistent cash flow coming in. And if we take a look here at the aggregate website that I use to track all of my dividends, I'm using Track Your Dividends. Track Your Dividends, it is a paid for service. I think it's $100 per year. And I like it because I am linking up multiple brokerages and I can look at everything in one glance. One thing I love about Track Your Dividends as well, in the upper pane, if you click on upcoming dividends, I should say, I can sort by my portfolio. And with M1, it's really nice. It kind of gives me a map, and it gives me a dollar amount approximate of all of my upcoming dividends. If I scroll down, and I can sort on what I expect to receive in the month of January. So you can see a lot of my monthly payers are going to be paying every month. And then right down here to, let's say, Walmart and ADC, they haven't quite reached the dollar threshold. But I love Track Your Dividends. I think if you are going to get serious about dividend investing, M1 is certainly a must. But you also might want to consider an aggregate site that gives you some different views. And as much as I love M1, the view that I see with other aggregate sites like Track Your Dividends does a way better job than what M1 does, and I think it's just the price of doing business. I also like that it has a calendar here, so I can literally hover on the 13th and see how much money that I'm receiving on that particular day. So if you look at the 18th, I'm set to receive $36.05. On the 17th, I'm receiving upwards of $51. So this is a pretty cool feature that I like, and for those of you that are thinking about retiring, whether it's, in the near future, in the long-term future, this would be something that you would want to have if you plan to live off of your dividends. Right now, I'm reinvesting everything, so I don't pay much attention to the daily dividends that are coming in, but certainly at the end of every month, I have a running tally. I want to give you guys all an adequate and solid update, so this website certainly helps me do that. So let's go back to M1 Finance here, and you can see all of my holdings, and it's a lot, right? 50 plus holdings. I think that needs to be a goal that I tackle this year, and that is make sure that I understand the full fundamentals of every single company that I hold in my portfolio. Because if I don't, then shame on me, right? I don't really know why I would hold on to it if I don't really understand the fundamentals. And guys, I'm the first one to keep it real. There are active stocks in my portfolio where if you just say, Wayne, describe what Starwood property entails. I mean, I might be able to wing it, give you kind of like a sentence or two as to what the stock is about. But in reality, I'm very much beginning my journey. And, I was very fast and furious, very aggressive with the stocks that I bought. And a lot of it was just listening to YouTube and other friends of mine and, watching CNBC. This year, I don't want to necessarily sell everything off, but I certainly think that I can narrow the number of my positions. And that's what I plan to do. But hands down, even if I'm holding all these stocks, I mean, we'll take Target, for example, right? Even if I were to say, Target is something that I no longer want to hold. I think what I need to do, though, is first gauge where I'm at, right? Am I upside down in my position? Does it make sense for me to just hold it, collect the dividends, and then essentially put it on a to-do list where I am going to sell it when I either break even or reach the profit that I am looking to reach? So let's go back over here, and in my portfolio, this is exactly why this is exactly why I know I've broken down my slices like this. Everything in my long-term hold should be just that, right? Everything from O Realty down to ExxonMobil, this should be here for the very long foreseeable future. Now, maybe if, a year or so goes by, I may reallocate some percentages. I may say, let me go ahead and reevaluate. I've got 2 retail stores like Target and Walmart, or maybe I've got 2 fast food chains that I kind of feel don't really serve a purpose to hold to. So that's also something that I'm going to focus on. But if you look at the long-term hold, I don't really have that issue currently. Now, if you say Wayne, Coke and Pepsi, I would argue that Pepsi is not exclusively a soft drink corporation, and if you haven't looked into all of the products that Pepsi is behind, this is something that I did learn this year, and I have begun to focus on some of my long-term growth holders, and I'm proud. I'm proud to own both Pepsi and Coke. I'm not parting ways with either of those stocks. But then we get into my quarterly dividend payers. And it's not to say that these stocks don't mean anything to me. They do. I mean, OCSL is my number 1 dividend payer. Let's go take a look here at Track Your Dividends. And if I do some research right here, we'll go back to the dashboard. And I'm going to type in OCSL. You guys can see here, OCSL is generating almost $2,200 in dividend income every year. That's an amazing number. Because if my goal is to build my long-term growth portfolio, then that $2,000 that I receive, it's not going to be reinvested in OCSL. If you look at the way my slices are allocated by percentage, 80%, right, of every dollar that comes in is going to go first to the long-term hold slice. So again, I have a lot of dividend stocks in my M1 portfolio, 50 plus. I may reduce those positions. I think what I first need to do, though, is dive into every slice and really understand the fundamentals. And guys, I'm going to admit it, there are stocks currently in this slice where I need to do some more research. But in the time being, I am going to collect those dividends. I am going to make sure that I'm not holding on to a complete loser. And that's one of the things that you'll know with M1. If you're allocating, let's say 5% to Prognosis, right? And Prologis, I should say, PLD, they do a lot of leasing to major corporations like Amazon and whatnot. So I do know a little bit about at least one stock here in my quarterly slice. But Prologis, let's say, it turned out to be not the stock that I wanted to hold on long term. I would be able to tell if every week Prologis is getting, right, the majority share of that money coming in because, right, the share price is down. And so M1 knows to allocate funds of incoming deposits or dividend redistributions to stocks that are underweight. So right now, you guys can see it's looking pretty good. It's not to say that I have all winners here in this quarterly dividend slice. But right now, other than Devon Energy, things are looking pretty good in this particular slice. Let's show you guys the ETF. A friend of mine, Will, I'm going to give you a shout out. He was watching our earlier video and he was like, "It's killing me, man. You showed every slice but the ETF slice. I wanted to see what you had in here." And even though I only, quote unquote, have 5 ETFs in my ETF folder, I can tell you right now, I am concerned about duplication. So this is also included among the research. And I've been networking with some great mentors out there who are pointing me to great websites, to include websites that I can do a side-by-side comparison of these ETFs, and so I don't have that duplication. You're going to have some duplication, right? The reality is holdings in VTI, they could show up in SPY, and holdings that you have in SCHD, they could also appear in VYM. That's just the reality of holding one or more ETFs, or I should say 2 or more ETFs. The trick of it is, though, you don't want to have 2 ETFs that do the exact same thing, right? The argument could be made, well, why don't you just go ahead and cut ties with one of them and focus on, let's say, VTI and SCHD. So again, I'm doing pretty well in these current ETFs. You guys can see here, I have reduced the SDY position to just 1%. Why? Because I do think that I'm going to sell off this position. But here's the great thing about dividend stocks. Shy of SDY, just going completely in the toilet, and it's nothing but an eyesore when I log on to my portfolio. Even if I reduce this to 1%, I'm still going to collect that quarterly dividend. And that quarterly dividend is going to be redistributed to my entire M1 portfolio with, right, chances are it's going to focus on that 80% allocation of the long-term hold. So I go back to the conundrum that I'm in. Yes, I have a lot of holdings, but at the same time, let's go back to track your dividends. We'll look at upcoming dividends, and this is a good problem to have. In my M1 portfolio, these are all of the upcoming dividends I am going to be paid in 2023. Some of them as small as 35 cents. Some of them as much as $549. So until I get a better handle on every single stock, I'm going to go ahead and leave my positions as they are. I'm very happy that M1 allows me to at least adjust my percentages. I can move stocks from one slice to another. And I did that actually fairly recently in my long-term hold. Even though O Realty is a monthly payer, I moved this monthly dividend stock from the monthly slice to the long-term hold. Why? Because even though O pays monthly dividends, it's something that I want to hold long-term. I've got a pretty good position here. In fact, I think I've got, let's take a look here at the total number of shares that I have with O. And O, if you didn't know, is a Realty Income Trust stock. It does pay monthly dividends, but you have to be careful because there are some tax implications when you own REIT, R-E-I-T stocks. But you can see here, guys, I've got 204 shares, pretty decent cost basis of $62.69 per share. And I'm currently up, given that the current market price is just over $66. So, long story longer, that was a stock that was otherwise in my monthly payer slice, and I was able to easily move that from this monthly dividend, even though it technically is a monthly payer. It doesn't mean that that's all it's good for, and so that is also what's nice about M1 as well. So I'm going to keep you guys updated. I know I was promising sort of like an update on what I transferred over in regard from Robinhood. Let's go back and, if you guys wanted to take a look, and whether you hit the pause button on YouTube, these are all of the shares that I actively transferred over from Robinhood. And I'm actually going to transfer another bunch of shares. So as if I didn't have enough positions, yes, guys, it may go from 51 to maybe 54 or 55. And it just goes back to the power of M1. I'd rather those dividend paying stocks be sitting in my M1, even if my plan is to sell them, whether it's 3 months, 6 months, 9 months. I'd rather they be sitting in M1, generating income that's properly, distributed across my chosen slices than just sitting in Robinhood. So I hope you guys enjoyed this tutorial. Again, if you guys have not jumped on the M1 bandwagon, I certainly think it's worth exploring. Do your own research. There's a lot of great content creators out there that have done very thorough reviews. And guys, as a friendly reminder, just because I own 100 shares of this stock or 200 shares of this stock, right? Everybody's perspective on why they own a stock is in fact that, right? Their perspective, right? It's very subjective. So please don't take anything that I'm holding or anything that I buy or sell in the future as financial advice. You want to make sure that you're doing that on your own. And guys, thanks again. We'll see you in the next one.